Hello, everybody. Thank you very much for joining. Just like all our other sessions, this session is being recorded. Okay, so we've had this discussion in the past before, and we focused on three main things, and I'm going to run you through those three main things. And then afterwards, we're going to cruise through random papers so that we can check through tips and tricks to just ensure that we are comfortable with the exam, even before the exam. Okay, all right. So firstly, let me just make mention. ZICA brings the same questions over and over again because they never really change their curriculum. I feel the only subjects they change slightly is taxation because the Zambian tax system changes. So we might change how we do things. Like for instance, this one is taxed at a different rate, or maybe it's treated at slightly different after a year or two. Okay, so taxation, but otherwise every other subject remains the same, unless if it's financial reporting, unless a standard has changed, an international accounting standard, or international, there's a new international financial reporting standard that they have included in their manual. So now we have to just make sure we are preparing our financial statements as per that international accounting standard. Like for instance, we had International Accounting Standard number 18, which is revenue. And now I believe we have International Financial Reporting Standard number 16, which is also now revenue. So they basically changed it, but not necessarily changed a number of things. Okay, so let's talk about the three important things that I believe will actually change the way you study. Okay, the three important things. This is how you are supposed to approach a paper. The first thing you're supposed to do is understand the theory. Okay, you have to make sure you are comfortable with the theory. When I talk about the theory, I'm talking about the terminologies, the words, the language, everything pertaining to that subject. If it's financial accounting, when they say carriage inwards, you need to know what that means. And you also need to know which financial statements are affected and how are they affected. Okay, so every single time you need to be comfortable with the language, you need to be comfortable with the theory. I'm going to tell you a little story. When I was studying, okay, there's something that I like to do. Let's say, for instance, I'll probably get even a dictionary, or I'll start looking up words because I know ZICA uses a lot of jargon, so they might use a word that you're not comfortable with, that you don't understand. So your job will be to make sure you understand it. Don't just understand it, but make sure you start using it as well. Make it a part of you. So you need to understand the terminologies, because if you understand the terminologies, then the explanations will be easy. You can literally make your own explanations pertaining to the terminology. So you need to make sure you understand the theory. That's the first part. Understand the theory. After you understand the theory, then you can link it to the computations. Because if you understand, maybe you understand what revenue is, and you know revenue represents your sales and then or turnover, okay, and then you know that okay, revenue is credited. You know the theory, you understand the material. Trust me, you know how revenue is affected by expenses because expenses are debited, revenue is credited. That means they are basically offsetting each other. That's the reason why we subtract expenses from revenue. And again, it will help you understand things like trial balances because you won't necessarily need to do any work. Everything will just be at the back of your head. Okay. So just make sure you're comfortable with the material. Make sure you understand the theory. Make sure you understand the terminologies. Make sure you understand all the definitions. That's the first part. Okay. That's what I like to refer to as the foundation. It's for every subject. Doesn't matter if it's financial accounting, management accounting, they all have a way of communicating. For instance, management accounting, you might find, for instance, in decision making, you find relevant costs. You need to understand what a relevant cost and an irrelevant cost is. You need to understand marginal costing or break-even analysis. Okay, you shouldn't just master how to solve them, but you need to understand them. Because if you understand them, even if they were to twist the question, you will still manage to solve it. Okay, but if you just master the steps to follow when solving for a particular question, then immediately ZICA does a little twist, you'll be confused. Trust me, you will. That's the first part. The second part is practicing. Okay, so the second part will actually help you with the first part even some more. Okay, The second part is practicing. You have to practice as many past paper questions as possible. Let me tell you this. The first time you write an exam, there is 100% chance that you fail. The first time you write an exam, there's 100% or close to 90% chance that you fail. So what you have to do is make sure that that first time is not in the exam room. Okay? What you need to do is make sure that that first time is not in the exam room. That's the main reason why we try our level best to ensure we solve as many past paper questions as possible. Because a past paper is literally an exam. Okay? It's literally an exam. So your first time answering an exam question paper shouldn't be in the exam. It should be outside the exam. You practice. The first time you fail. So fail outside. Okay? And then you try again. You might fail the second time. You fail again, which is okay. Because that's not an actual exam, but it's a previous exam that you're using to practice. And then you solve again. At some point, you will stop failing. And then when you stop failing, then you are comfortable. Now what you have to do is practice. You need to practice as many past paper questions as possible. Just make the computations, the working, the formats, the terminologies, everything a part of you. Okay? And then once you manage to make everything a part of you, okay, practice some more again to make sure everything is okay. But all that can work with the last point. And that is, you must develop an appreciation for the subject. You need to learn how to love the subject that you are looking at. If it's taxation, develop interest in taxation. It's easy to understand taxation if you have interest in learning taxation. Management accounting, financial reporting, financial accounting, or business economics, they are all the same. You need to develop a sense of appreciation for the subject. Then it will be very, very easy for you. Okay? So the first part is understanding the terminologies, understanding the theory, and the second is practicing as many past paper questions as possible, because the first time you write an exam, you will fail, okay? But you have to make sure you do not fail, okay? And then the last one is you have to make sure you love the subject. Okay, so now let's cruise through various subjects and various tips and tricks. Okay, so this particular paper, I'm assuming you can see my screen. Okay, so we'll start with this particular paper, and that will be our focus. Okay, all right. So this is a financial accounting question, a financial accounting paper. This is 12 September 2022, and ZICA always does the same thing over and over again. Okay, and what I'm going to explain pertaining to this paper is the same for every other subject. Okay, what I'm going to explain for this particular paper is the same for every other subject. Mr. Jeremiah, can you see my screen? Can you see the paper that I've just opened?
Yes, I'm seeing it.
Okay, perfect. All right, let's not forget the first part, okay? Understand the terminologies, understand the material, understand the theory, practice as many past paper questions as possible, and simply love the subject, okay? And then everything will be very good for you. Okay, so I've opened the paper. This is March 2022. Okay, it's a March 2022 past paper that you have to ensure you are comfortable with, that you have to ensure you understand. All right. Okay, so this paper is for September. I want to show you something. I've opened the random papers here, okay? I want to show you something. So firstly, we have section A that has got 10 questions. These are mainly theoretical, but you might have a few computations as well. Okay, and this is just for the first level, and financial accounting is in the first level. Okay, but I'll go to question number 2. I'll do the same for every subject. I'll go to question number 2. We've seen the first part of the question is they want an income statement and a statement of financial position for a limited liability company. Okay, and understanding the theory means you need to understand what a limited liability company is. And apart from that, you need to understand the formats and everything theory in terms of how to create income statements and statement of financial position. That's our first question. Let's check out our second question. Our second question is on have to be corrections. Yeah, corrections. That's prepare the adjusted cash book. They want you to correct some errors and then you prepare an adjusted cash book. And then afterwards, you're doing a bank reconciliation. And then there's a theoretical question. And then afterwards, it's a theory question on petty cash book. Okay, let's check out question number 4. So question number 4 is they want capital accounts, mufti accounts. Okay, and then they want an appropriation account for a partnership. Okay, so this is a partnership question. Okay, and then let's check the next question. The next question is on assets. Okay, they want the motor vehicle cost. These are T accounts. The motor vehicle at cost. They want the motor vehicle accumulated depreciation account. They want the disposal account. And then let's check out the last question. The last question, they're saying they want an explanation of error of principal and error of single entry. And then they want journal entries to correct a couple of errors above. Okay, and then the last one, they want a contingent liability. I mean, okay, there's a number 6. Okay, so the number 6, they want an income statement and a balance sheet, but this time around, this is for a sole trader. So it's more of the same question, but just a different business type. Okay, the first one was for was for a limited liability company. They brought in a partnership again as well, but this time around they're bringing a sole trader. Okay, let's check our next paper. Okay, let's check our next paper. So our next paper, okay, our next paper is March 2023. Okay, our next paper is March 2023. Okay, let's get to understand what's in this paper and then we compare it to the first paper. Okay, so let's check the questions. We'll do the same for every subject, by the way. Okay, and then also a plus on this particular session is that you're going to see the exam in full. Okay, you're going to see the exam in full, not necessarily just a topic that we've covered or a topic that we covered in the past, but you get to see the entire picture. Okay, so now we are checking. So again, we have the first, which is multiple choice. Let's go to the next part. Okay, so the first part is on income statements. Again, they want a statement of changes in equity, and then they want a statement of financial position. And this is for a limited liability question, limited liability type of business. Again, limited liability company. And then here again, we want they want a theoretical explanation of going concern and also qualitative characteristics such as relevance and faithful representation. The features that add value or quality to financial reporting and or financial statements. Okay, they are also asking for a theoretical question on accrual basis. Okay, they want some journal entries and correction of errors, again, more like the first paper. And then here they want us to prepare a statement of affairs for December 2021. So if they bring up a statement of affairs, okay, so they want us to prepare a statement of affairs. And then apart from that, let's check. Okay, they want assets account, more like the other question. So just look at two papers because I want to make sure we have enough time to look at all the subjects. Okay, and then here an adjusted cash book again and the bank reconciliation again. Okay, all right. So what's our observation from these two papers that we've looked at? We can check all the other papers, but we just find the same information. What's our observation? This proves that ZICA brings the same questions over and over again. Okay, this means you need to understand the type of businesses. This is in terms of financial accounting. You need to understand the types of businesses. Okay, apart from the types of businesses, you need to understand financial statements relating to the types of businesses. You need to understand cash books, errors, bank reconciliations, how to adjust a cash book or a bank reconciliation for errors. Okay, you need to make sure you are comfortable with all that for you to be comfortable to write an exam. Apart from that, there are also certain topics that are not part of these questions. That's cash flow statements, statement of changes in equity. They usually come. Okay, manufacturing accounts. They also usually come. Okay, so there are a number of things that you need to make sure you are comfortable with. And then every single time, ZICA will bring in additional information. So this additional information basically represent adjustments that will affect our trial balance, that will affect the information in our trial balance. So you need to understand how each additional information is going to affect our trial balance. Like for instance, here they're saying there are accrued carriage outwards of 146. So when they say accrue, you need to be comfortable with the fact that an accrue means they've recognized that expense in this period, but they have not paid it yet. Thus, it is a liability. It will be an expense in the income statement and it will be a liability. Okay? That's how it is. So when I talk about understanding the theory, I'm talking about you understanding such things. Have you seen it, memory? Understanding the theory, okay, understanding the material, and then practicing it. Okay, so every additional information here must be something that you are comfortable with. Otherwise, financial accounting is not complicated at all. It's something that you can easily clear for as long as you just make sure you understand the theory, you understand the material, you practice it, and you develop a sense of appreciation. How about we use a different subject as an example? Okay, how about we use a different subject as an example? Let's go to taxation. We'll also look at financial reporting. Okay, let's check out taxation, and then we check the questions that they bring. Okay, we check the question. We check two papers as well. We check the questions that they bring, and then we also do a run through, a cruise through, get to understand a couple of things, how we should approach the exam, and then afterwards we go to financial reporting, then management accounting, then business economics. Okay, all right. Okay, perfect. I'm on taxation. Let me just open taxation in my other paper as well. Okay, yeah, I'm finally here after fighting for a few minutes. Anyways, so I've opened taxation. Okay, taxation, that's for September and March. Okay, taxation, that's for September and March. Let's cruise through the two. All right, so taxation every single time. The first thing that, yeah, you need to understand the instructions, by the way, but the first thing that they give you is a tax table. They give you a tax table. The reason why they give you a tax table is because tax information varies in different periods. Remember when I said in taxation, the main thing that changes isn't really the actual curriculum, but rather tax information. Like for instance, maybe you are calculating income tax at 30% and now it's 35%, or maybe the threshold was at 54,000, but now it's at 48,000. Okay, it basically follows. They're trying to align it with ZICA tax information to just make sure use the up-to-date information. Okay, so taxation always starts with a tax table every single time. They'll give you this information. I always say this in terms of taxation, there is no need for you to master. There is no need for you to master tax information. Instead, what you need to ensure is you need to understand how to use that information. There is no need for you to master tax information. What you need to ensure is you understand that information and you understand how to use that information. Okay, you need to know that, okay, like for instance, we have standard personal income tax rates. You need to know how to apply standard personal income tax rates. Okay, you need to know how to apply standard income tax rates. You don't need to master standard income tax rates. You just need to know how to apply them. Like for instance, if someone earns maybe like 50,000, if someone earns maybe like 50,000 kwacha in a month or in a year, you need to know, if it's in a year, you need to know that, okay, the entire 50,000 will be taxed at 0%. But if they earn like 100, it means the first 54,000 will be at 0%. And then the difference, okay, and then the difference will follow the band. Like for instance, the difference between 54,000 Okay, basically the next 3,600 will be at 25%, the next 3,000 will be at 30%, and then the excess will be at 37.5%. Okay, all right, so that's how it is. You need to understand how to use them. Let's scroll through the questions now. So the first question is always on income tax. Okay, the first question is always on income tax. There are some rare cases where they bring personal income tax, okay, where they bring personal income tax. When I say personal income tax, I mean income tax relating to an individual's income. Like for instance, Cynthia, maybe your personal income, okay? That's maybe you are running a business as a sole trader and you are also employed, or you are employed and you have investment income. There are some rare scenarios where they'll bring it in question number one, but most of the time they bring company income tax and they always give you 40 marks for the company income tax. Okay, so let me tell you what you're supposed to understand in terms of company income tax. So we have what we refer to as provisional income, which is provisional income tax, which is calculated on provisional income. Provisional income is your budgeted income. Okay, so provisional income tax is calculated, is income tax that's calculated on budgeted income. So you need to be comfortable with provisional income tax and how to calculate provisional income tax. Also, you need to note that provisional income tax uses the normal income tax rates. If it's a sole proprietorship, then it's going to use the sole proprietorship rates, which are the standard personal income tax rates. But if it's a company, it's going to use the company income tax rates. Okay, apart from that, you need to understand how to calculate your tax adjusted business profit. There's a difference between tax adjusted business profit. Just a second. Okay, there's a difference between your tax adjusted business profit and your accounting profit. Okay, so you need to understand the difference, and you need to understand how to come up with your tax adjusted business profit. This will lead you to ensure you understand non-deductible expenses and deductible expenses. Okay, so that you know what's supposed to be added back, what's supposed to be subtracted. Okay, so tax adjusted business profit is business profit that we compute or we calculate as per ZICA standards or as per our tax authority. Okay. Whilst your accounting profit is the profit that we calculate using your normal the profit that we calculate using the normal international accounting standards and international financial reporting standards. Okay, so you need to understand how to come up with the tax adjusted business profit and the accounting profit. But in terms of taxation, is mainly the tax adjusted business profit. They never really ask you for the accounting profit. Instead, the accounting profit is always part of the question. And apart from that, you need to understand capital allowances. Okay, capital allowances are basically reliefs that you get because you own non-current assets that lose value over time. And then lastly, you need to understand how to literally calculate your income tax. And then if they didn't bring, if the first question wasn't personal income tax, then the second question might be personal income tax. Like for instance, in this question uses a particular format, okay? Every single time we need to get our, if there's a mixture of employment and investment income talks about income like you're offering consultancy services, or you're receiving royalties, or you are getting dividends because you invested in some company. Okay, that's what we refer to as investment income. So if a question has got both investment income and employment income, always use a particular format. That format is employment income plus investment income less deductible expenses that you need to understand, and then afterwards you get your total taxable income. And then total taxable income, you charge the you charge the band, you bring in the band, you apply the band, you calculate the tax liability. After calculating the tax liability, then you bring in then you subtract tax already paid. For instance, pay as you earn or any withholding tax. Okay, all right, otherwise that's the entire format. And then the other parts might just be theory. Like for instance, you need to understand which emoluments are supposed to be taxed or which ones are not supposed to be taxed in terms of employment income. and then also you need to understand the receipt basis. Okay, all right. And then we also in terms of taxation, there are certain questions that like to pop up, okay, which is property transfer tax. So let me tell you something about property transfer tax. Property transfer tax, most of the time, they never really bring it on its own. And almost every single time it comes, okay? Let me just show you this paper. I'll explain property transfer tax. Let me just show you this paper. So this paper, the first part is likely to be a company. Okay, this is a partnership. Okay, so the first part is a partnership. So the partnership is also income tax. Okay, so it's also income tax. We're calculating income tax for the partnership. And then we have a limited liability company, which is most likely income tax again. And then here, this one looks like property transfer tax. So we check, it's also property transfer tax. Okay, but if you pay attention, you notice that they never really bring it on its own. Firstly, they'll bring some other things. Then later on, maybe ask you a theoretical question on PTT, and then afterwards bring a separate question, which is asking you to calculate PTT. Okay, so if we check here, it's the same. See, we have here a theoretical question, another theoretical question, and then a question on PTT, and then a computation question on PTT, giving you 10 marks. Okay, and then this one, okay, this one again is the same format, the theory, another question on PTT, and then here giving you 8 marks. There's a 2 marks difference. Okay, so PTT refers to the tax that you pay, either you're an individual or a company, because you have transferred a property. Okay, because you've transferred a property. All right, let me tell you a couple of tricks that ZICA likes to do. These tricks are mainly on, in terms of PTT, the tricks are mainly on shares and relatives. Okay, shares and relatives. Like for instance, here we have on, this is shares. Okay, on 22 April 2022, he sold 15,000 shares in Bismarck's PLC of 25 kwacha each. The nominal value of these shares was 5 kwacha. He had bought these shares for an initial public offer in 2018 at the price of 2 kwacha per share. Okay, so it was a public offer. Okay, let's check out the relatives. Let me check if there's another one on relatives. So this is a neighbor. Let's check if there's one that's more specific. Okay, so the only one that might be close to a relative is a neighbor. So someone might think of like, okay, because PTT, for as long as you've given a particular product to a relative, okay, for as long as you've given a particular product to a relative who has to be in your nuclear family, then your PTT, you won't pay any PTT, okay, unless you sold it for a particular amount. So if, okay, PTT is calculated on the higher amount between the value of the asset that you've sold and the proceeds that you've gotten. So if your proceeds are maybe 50,000 and then the value is 100,000, if it's not a relative, then we're going to calculate PTT on the 100,000, not the 50,000 that you've received. Okay, but if it's a relative, we're going to calculate the PTT on the 50,000, and the relative has to be part of the nuclear family. You get my point, Mr. Jeremiah. A nuclear family, like father, mother, children, not necessarily your uncle or your great grandmother. Okay, every single time you have to make sure it's a nuclear family. So there's something that I've noticed. What I've noticed is that ZICA might say something like this. Okay, a neighbor, or sometimes they might say a cousin. Okay, or sometimes they might say a relative who makes up, like for instance, an extended family. So you need to be comfortable with the fact that PTT is only charged at the disposal proceeds if it's a nuclear family, of which if the disposal proceeds are 0, it will be considered as a gift, and then there'll be no PTT. Okay, all right. And then in terms of the shares, PTT. In terms of the shares, PTT is not charged if it's a loosely registered company. That's the reason why if it's a public offer, it means it's loosely registered. And then the other part is, PTT is not charged on motor vehicles. Let's check for one here. let's check for one. Yeah, there's this one that says on 2nd April 2022, he sold his Toyota Corolla car for 55,000. So the Toyota Corolla car is considered to be a personal vehicle. Okay, it's treated as a personal vehicle, a chattel. PTT is not charged on chattel. So there are a number of interesting things or tips that you need to know pertaining to almost every part of our subjects. Just make sure you're comfortable, more like PTT. Okay, let's check. You've seen that PTT is in both. If you want to check a different subject or a different paper, you'll notice that there will also be PTT in it. So you have to make sure you are comfortable with how to calculate property transfer tax. And then we have some theoretical questions here that you need to understand, okay? And then there's also this other topic that they always bring. So check through this one, and then let's check this paper as well. So question number 4. Okay, this one looks like personal income tax. Let's check question number 5. Okay, question number 5 looks like import. No, it looks like VAT. Let's see if the total VAT registration. Let's see. Okay, so it's import taxes, compute the customs value. Okay, it's import taxes. Okay, so we have a bit of VAT and import taxes. Although VAT usually comes as well, we shouldn't really leave it out. Okay, so this is import taxes as well. Okay, so this is import taxes and the other one is import taxes. Okay, so in terms of import taxes, you need to understand all our import taxes and how to calculate them. And also you need to be comfortable with the fact that import taxes are calculated on, this is the VAT question. Let me check for the import part. This is the import. Company purchased this Toyota Fortuner at the income tax expense. Okay, all right, that's import taxes, standard rate. Okay, this is VAT and the combination of import taxes. Okay, all right, so I'll explain both. Just make sure everybody's comfortable. Okay, so import taxes, we know we are talking about import taxes. We know we are talking about taxes that you pay because you acquired a particular asset or a particular item from abroad. Okay, so the cost of you basically bringing it here are the import costs, and then the import taxes are the taxes that you pay because you are bringing a foreign good into the country or a foreign product into the country. Okay, so import taxes, we have 3 import taxes. Okay, we have what we refer to as custom duty. Okay, for custom duty, we use the custom duty rates, which ZICA always gives you every single time in your question. And then we have what we refer to as, by the way, the custom duty is the tax or the duty that is charged on the cost of the item you're importing. Okay, we refer to it as the value for duty purposes. Okay, all right. So, and then, or the custom value. Okay, the custom value represents the total cost of acquiring whatever you're acquiring. It brings in the CIF, that's the cost, the insurance, and the freight, of which the cost is the purchase price. The insurance is the insurance that you've paid. They always give you that information in the question, and the freight represents the transportation from wherever you got it from up to the border port. Okay, all right. And then the custom duty is calculated on that total, but in kwacha. The kwacha amount is what we refer to as the value for duty purposes in kwacha. Okay, all right. So, and then we have what we refer to as excise duty. Excise duty is also an import tax, but it is charged on certain items, like for instance, some luxury products or some products that might destroy our environment, like for instance, smoke. Okay, you need to be comfortable with that fact. And then we also have import VAT. It's also a standard rate, which is 16%, and it's charged at basically everything that you import. Okay, so import VAT, you charge it every single time. Okay, every single time you charge import VAT. Excise duty, ZICA will tell you on which items to charge. They won't tell you in the question, they'll tell you in the tax information on top. You notice that a particular type of item might not have excise duty, then it's not chargeable. You get my point, Mr. Jeremiah? So just check for the custom duty, and for every type of item, if one does not have it, then excise duty is not chargeable on that item. You get my point, Mr. Jeremiah?
Yes.
Okay, all right, perfect. And then that's how we and then that's how we handle our excise duty. And then import VAT is always at 16%. Okay, it's a progressive system. That means when we get our custom duty and the excise duty, for us to come up with our excise, we're going to do this. Custom value plus custom duty plus excise duty. Then on our total, we'll calculate our import VAT. We might also have what we refer to as a SETEX tax. A SETEX tax is a tax that is charged on very old vehicles that are imported. Like, for instance, a vehicle that was manufactured more than 5 years ago. You might pay a SETEX tax. The SETEX tax is fixed at 2,000 kwacha, of which every single time they bring it in the question. So you have that information in the question. All right. So that's in terms of import taxes. Everything is like that every single time. Okay. There's a format that we use, but for you to get the format, you have to join our classes when we do our computations. All right. The other one is VAT. Okay. VAT, we have we have three types of VAT. We have zero rated VAT, which is 0%. We have exempt VAT, which is for exempt products. For products like medicines, you don't need to pay any VAT. And we have standard rated. Standard rated is at 16%, of which it hasn't changed in a very long time. Okay. And then we have two categories of VAT. We have what we refer to as input VAT, and we have what we refer to as output VAT. The output VAT is on purchases, whilst the input VAT is on the output VAT is on sales, whilst the input VAT is on purchases. So what we do is we compare the two. Input VAT is refundable, whilst output VAT is payable. Because output VAT is on sales, that means we receive it. Input VAT is on purchases, that means we pay it. Input VAT is refundable, whilst output VAT is payable. So what we do is we just compare our total output VAT to our total input VAT, and then if our output VAT is more, that means we'll have to pay. If our input VAT is more, that means we'll have a VAT refund. Okay, that's how we come up with our VAT. Otherwise, these are the common taxes in terms of taxation that you need to understand for you to be comfortable with the subject. If we've left out a few, we'll probably talk about them as we go on in our course, in our learning. Okay, so now let's go to financial reporting. Mr. Jeremiah, does that help you to understand taxation even more? Okay, so this is taxation, okay? This is taxation. No, it doesn't really look like taxation. Just a second. No, financial reporting. I want financial reporting. I have financial reporting in here. Yeah, it has to be it. Let me check. I know this looks like taxation. Okay, yeah, I found it. It's on top. Okay, so let's talk about financial reporting. So financial reporting, I'll open two separate papers as well. Probably still loading because it's on the first pages or so. Okay, I think it will come up now. Okay, perfect. So I've opened financial reporting twice, okay, so that we can just get to see it in the next 5 minutes and then we close up. We're supposed to do business economics as well as management accounting, but we'll probably talk about them in a different tips and tricks class because we're about to run out of time. All right, so financial reporting, this is how it comes every single time. So there's something that you need to understand in terms of financial reporting. So financial reporting, they also bring almost the same questions every single time. Let's just do a comparison. Let's check the first question. The first question is on two companies, Paul and Sol Limited, and let's check the requirements. They want you to prepare an income statement that's consolidated. They want you to prepare a consolidated statement of financial position, and they want you to explain an international financial reporting standard. Let's check the other paper. We check what question. So question number one is also two limited liability companies. And then let's check the requirements. The first one is just a theoretical. It's just a theoretical question. No, that's not the first one. The first one is they want an income statement for 30 good marks. And then they want a consolidated goodwill that arose on the acquisition date. Okay? Goodwill is not part, goodwill is part of the statement of financial position. So here the reason why they need you to calculate it, because it won't necessarily be part of the consolidated income statement. Okay? All right. So, and then here they're asking what they mean by significant influence and any indicative factors. Okay. So basically what you've seen is the fact that every single time, question number one is always consolidation. Sometimes they bring you a statement of financial position, a consolidated statement of financial position, or a consolidated statement of financial performance. And they also like to ask about goodwill. So you have to make sure you understand all the business combination statement, international financial reporting standards, and international accounting standards for you to be comfortable with basically just goodwill. And also this particular question in full. And then question number two is on what we refer to as published financial statements. Okay, so let's go directly to question number two. Let me just put this back here. Okay, let's just go to question number two. Question number two, this question is on a limited liability company. And then at the bottom, they'll bring additional information like in financial accounting. They want an income statement and a balance sheet. Okay, so here, let's check question number two. It's also a limited liability company. And then they want an income statement, a balance sheet, and a statement of changes in equity. But most time, the statement of changes in equity comes between the income statement and the balance sheet because it's a part of the balance sheet. Like your answers here will come here. So here, it will be easy because I'll basically just get an extract of the equity portion of the balance sheet and just make it my statement of changes in equity. Okay, so basically, what I mean is that question number one and question number two, the first one is always consolidation. The second one is always published. So there are a few scenarios where they might interchange the two. So the secret to financial reporting is understanding the international accounting standards. That's two main things. The recognition and the measurement. The recognition refers to when do you recognize it. The measurement refers to how much are we going to put in our financials. It's the way we are going to recognize it and the how much. When is the recognition and the how much is the measurement? Okay, so you need to understand international accounting standard number two: inventories, borrowing costs, government grants, presentation of financial statements, property, plant, and equipment. Number 16, you have to be comfortable with the international accounting standards. They need to be a part of you. Financial reporting is all about standards. Even consolidation is all about business combination standards. Okay, apart from that, you need to understand cash flows. This must be cash flows. See, it's cash flows. This must be cash flows. I could tell just from the way the question popped up. Okay, let's check our question 3, what we have. We have cash flows again. So you have to understand how to prepare a statement of cash flows. So in terms of a statement of cash flows, okay, in terms of statement of cash flows, we follow International Accounting Standard number 7, which is on statement of cash flows. This basically gives us the formats, okay, how to put up a perfect title, or basically everything relating to International Accounting Standard number 7, statement of cash flows. Okay, so you need to understand how to come up with your operations, your cash flows from operations, either using the direct method or the indirect method. Sometimes they might be specific. You need to understand how to come up with your total investment and your total financing. Okay, the total inflows or cash flows from you need to understand how to come up with the cash flows from operating activities, financing activities, and investment activities. Okay, and then the other one is they bring theoretical questions on standards. Like currently in our financial reporting, we've done borrowing costs, we've done government grants, and they might pop up here. Okay, we'll also do loans and a couple of other interesting international accounting standards, but they might pop up here. What they'll do is that they'll bring transactions, and then they'll list transactions, more like they've listed transactions, and then they'll ask you to explain them and also how they'll be accounted in the financials and the figures. You've seen that question number 4 is also transactions here. These transactions are basically international accounting standards. They're basically just testing you to see if you understand international accounting standards and how, in terms of the recognition and the measurement, how to compute figures and how formats and everything and how they'll affect our financial statements. The last question is mainly theoretical. As you can see, question number 5 is a theoretical question, although we have a standard as well here, which I believe is on loans, okay, which is financial instruments. Let's say question number 5 is also theoretical. So what this means is that you need to understand published, consolidated statements, cash flows, okay? You need to understand your international accounting standards. That's the measurement and the recognitions in details. And apart from that, you need to understand your ratios. They're not in this question, but they might come. Your working capital system, that's also management accounting, and it also comes in here as well, okay? You need to make sure you are comfortable with the theory, you understand the material, and that everything is a part of you, okay? All right, so this is how you get to understand financial reporting. So I would have spoken a bit more in details, but I've actually run out of time. So if there's anything specific that you might have a question on, you can ask me, or if you feel this discussion has actually helped you to understand an overview of the entire subject. Mr. Jeremiah, do you think this has helped you to understand an overview of maybe let's say taxation in terms of how they bring questions and what you have to look out for? Madam Memory, Cynthia? Okay, so all right. So unfortunately, we've run out of time. Okay. I'm glad you all made it. This session has been recorded. In case you want to watch it again, I'll share the link in the same group I sent the earlier link. Otherwise, thank you very much for your time. Hope to see you in all our sessions. Thank you.
Thank you, sir.